Well, good afternoon. Happy Friday, January 21st. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. Kind of a mixed bag this week. Didn't get off to a very good start, but the past 3 days have seen some improvement, or at least a plateau in terms of interest rates increasing. We all know 2022 has not been kind to mortgage interest rates. We've seen a pretty heavy sell-off in mortgage-backed securities. That causes our interest rates to go up, and they've gone up quite a bit from 30 days ago. But what we're really focusing on now is what comes next. How bad does this get for us? And this is all centered around inflation. If anyone tells you there's any other factor that's contributing towards the interest rates going up, that's really not the story. What is the story is inflation, and we've all been dealing with it for the past year in terms of price inflation. We're also now seeing some wage inflation. And inflation, the most broadly reported measure of inflation, is the CPI, the Consumer Price Index, and typically what they're reporting is the one-year CPI. This is the year-over-year measurement for where we were this time last year to where we are this time this year, and that number is at a 40-year high, a number we have not seen since 1982, a little over 7% inflation, about 350% of the Fed's target rate for inflation. So that's definitely not welcome. Everyone would agree that's too high, but it's important to note that when we measure inflation, we are measuring it year over year. And if you look back in 2021, the year we just left, January inflation in 2021 was pretty doggone low, right around 1.4%. Of course, the country was still in the grips of the pandemic. Very few vaccinations that occurred in January of 2021. And you'll note as we move through the end of Q1 of 2021, inflation did start to pick up 4.2% in April, 5% in May. And that tells us that if we hold serve here in 2022 and things don't get a lot worse in terms of our prices going up, that our overall inflation number, our year-over-year inflation number for the CPI should actually start to come down, which would be welcome news, that perhaps by early summer we won't be at 7%, we'll be more like 4 to 5%, and perhaps by fall we won't be at 4 to 5%, we might be down to 3 to 4%. It'd be very interesting to watch. According to this website, Trading Economics, if you look over at the forecast for inflation for 2022, you can see that right now, January of 2022 appears to be, at least according to them, the absolute worst of it. And we're hovering up here right around 7%. But as we move through spring on into summer, we can see that number coming down between 4 and 5% around July of 2022. And take a look here at the end of the year on into January of 2023, getting very, very close to the Fed's target rate of 2% even. That would be welcome news for mortgage interest rates, no doubt, and certainly welcome news for those folks trying to afford the groceries at the grocery store or the gas at the pump. Now, of particular note, next week, Tuesday and Wednesday, very big days, a regularly scheduled Fed Open Market Committee meeting with the policy decision coming at 2 p.m. Eastern Time on Wednesday, the 26th. We don't expect any changes to the Fed funds rate, but it will be very interesting to hear what the Fed has to say about its tapering program. The Fed is tapering their purchases of mortgage-backed securities and treasuries. Wouldn't surprise me at all to hear that the Fed bringing those to an abrupt halt in preparation for the first Fed rate hike that we've seen in quite a long time happening at the regularly scheduled meeting in March. Some folks think we're headed for a quarter-point rate hike. Some folks think we're headed for a half-point rate hike. It's important to note, though, this is the overnight lending rate, the Fed funds rate. It is not a mortgage interest rate. Of course, lots to pay attention to here, and the Fed's decision will certainly be data dependent between now and March, but all indications are we're going to see an increase to tapering, perhaps a complete stop of mortgage-backed security purchases as early as middle of next week, and then a Fed rate hike coming in March. If I can be of any service to you, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.